afternoon, everybody. Welcome. Welcome to our first market close without Trudeau. Trudeau is now gone. We have a new prime minister. Mark Carney was sworn in today. So no more Justin Trudeau. We got Mark Carney. We got he's also got he's got his new cabinet. A lot of the same faces in different places, but yeah, it's finally happened. So, whew, now the next big thing is, when are we going to get an election? When are we going to get an election? They did ask him in the news press conference this afternoon. They said, when are we going to get an election? He wasn't willing to really give a lot of information. He just said it'll be before November. Yeah, of course. With the Liberals doing as well as they're doing in the polls right now, I think it's a foregone conclusion we're going to get a spring election. So it's coming. It's coming. So gotta love it. You gotta love it. All right, guys, we had a green day. we had a green day. Gotta love that. Gotta love that. Let's pull up the market. Let's jump right in. The TSX, we're up a full 1.32%. So not a bad day. Not a bad day, of course. You know, a lot of this, whether you like Carney, whether you don't like Carney, he did have a positive impact on the market today because he is a financial guy. He actually understands finances a lot more than the outgoing prime minister did. So yeah, the market reacted pretty well to it. Now, mind you, we're also getting a lot of recovery in the United States as well. And there's a lot of reasons for some of the positivity today. One of those reasons, of course, is we had this big meeting yesterday between Doug Ford and Lutnick. So that meeting, even though we haven't removed any of the tariffs, all the tariffs are still in place. It at least brought a little bit more calmness to the situation. It cooled the temperature and the tensions down quite a bit, and we're seeing that in the market today on both sides of the border. So as you can see down here, the S&P 500, it's almost up 2%, so 1.99% up. NASDAQ, even better, 2.32% up. And the Dow Jones, yes, even the Dow Jones up a good 1.57%. Gold is down a little bit today, down 0.21. Silver's down 0.4. WTI, West Texas Intermediate oil, looking strong. It is coming in at 0.94. Both Bitcoin and Ethereum both having positive days. Bitcoin almost up 5%, 4.37. Ethereum up 3.78. Looking at the heat map, wow, we do have a lot of green in here. The banks are all looking pretty darn good. We got Royal Bank at 1.90 up. Look at this, Manulife Financial. They're up 2.74. Fairfax Financial up 2.52. It's looking good. CP Rail, they're doing really good today, up 2.57%. The telecoms, they're still, look at this, Bell down 4.31%. They're not, the telecoms don't seem to want to join the party. They're going in the opposite direction. They're the party poopers of the day. If there's any sector that would earn that title, it is, it's the telecoms. It's the telecoms. Looking at the United States, once again, look at the green. This is a nice looking color. We got pretty much all of tech is up. Like, look at this. NVIDIA up 4.61, Microsoft up 2.61, Meta 2.79, Tesla 3.28. So yeah, not a lot down. Well, Coke is down 0.82%. So it's looking pretty strong. And crypto, once again, crypto is in that same boat. Nice and green. The only things that are not... Oh, I got to pull this up. You guys remember Mint Club? They're still heading down after this big 2,000,000% pump. 2,000,000% pump, and it's all downhill. It's all downhill from there. That's a Mint Club. I still don't actually know what they do. I probably should look them up just out of curiosity more than anything else. But as we know, there's about 15,000 plus different coins out there. I do like to every so often, we'll grab a red one today. Just grab some coin I have never heard. This is not a red coin. I didn't even mean to click on that coin. Grab a coin that I've never heard of. All right, let's see. This red one right here. Let's grab it. This here is Ronald in Ho coin. If you read that the wrong way, that could almost sound dirty. Ronald in Ho coin. So yeah, this is what the banana bread is this? I don't know what it is. I don't know what it does. I don't even know if I want to know what it does. It is worth a penny and a half though, but Ronald and Ho, no thank you. No thank you, Ronald. Guys, like I always say, crypto, there's a lot of opportunity in crypto, but stick to the coins that you know. The tried and true Bitcoins, Ethereums, even the Dogecoin. Um, Much better choice than some of the smaller crap coins. And if you are going to get involved in them, make sure you have some confidence in them. At the very least, read their white paper, make sure it makes sense to you. And I will always say this: when you're investing in a crap coin, don't invest more than you're willing to lose. Really, really, really take that part to heart because that's kind of important. Oh boy. All right. um, let's actually get back to the chat here. I'm gonna pull me back up. And Mario is in first with a good afternoon, everyone. We got Max. Max is saying, "Happy Friday, everyone. Today seems a better day." Absolutely. Even right now, I'm looking out my window. It's a blue sky. Our temperature is we're above freezing, so it looks like spring is finally looking to come through. Actually, we're going to go up in the double digits on Sunday. It's going to rain, but double digits nonetheless. We got Bleak in the house with a good old greeting. And Jordan, who do you get to tend to the clowns? A Carney. There we go. That's actually kind of clever. That's actually kind of clever. Like that, Jordan. I hope you're doing well. Guy says, or Guy says, hello, Candace and everyone. Always good to see you. Let's see. Question: how long does it take you to produce a video? Pamina. Okay. All right. So it's actually the first part is the scripting. So the scripting, I usually take about, well, I would say half a day, but keep in mind that includes as well making the graphics that are going to go up in there as well as pulling all of the data. So probably about a half a day to a day, depending on the video. Some videos, require a lot more research than others. Once that happens, the actual filming, so to film it usually takes about usually 35 minutes or so. So, and then I take that 35 minutes of film and I edit it down, and I make mistakes. Oh, I make plenty of mistakes. Sometimes I'll, because sometimes what you'll see is you might see for some reason I seem to be chuckling a little bit all of a sudden, and it's like there's no reason why. It's probably because there's been a cut between the part where I wasn't chuckling and the part where I am chuckling, and I said something completely ridiculous, or I misread something on the script, or it just went craziness ensued. Or sometimes the cat came in and made some noise, or there's been an interruption, or the doorbell rang, or who knows what it is. For the most part, this mic, it is directional. Oops. There we go. So yeah, when I picked up the mic to show you, I accidentally hit the mute. That's hilarious. I'm thank you for letting me know right away, guys. Um, okay, so yeah, like I said, the sound is directional. I'm going right back to where I was when I probably hit the mic. The sound's directional, so it usually will ignore most side sounds, but if it's loud enough, it'll definitely pick it up. There's been a couple of times I think Jill's yelled something at me where it's picked it up, but I'll edit that out. So then the editing. So the editing is the final part. So the editing, usually it's about a half a day, unless something horribly goes wrong with it. So I have to go in, and for example, some of the things I will do is, let's say I do this on the thing. I don't want a sniffing sound in the middle of a video. So I'm either going to cut that part out, but if I cut it out and it makes everything jerky, I'm going to be like, I can't have that. So a lot of times what I have to do is I might just cut that little sniffle out. And I'm not cutting it out, but I'll isolate it and I'll turn the volume off on that. So I'll just lower the volume so the sniff goes away. So I do things like that. Also bring in the graphics and any transitions that happen, all of that fun stuff. So once that's all done, I then save it. Then I give it a quick watch through. And at that point, I then release it to the channel members. And even then, guys, sometimes there's been a few times where there's been a tiny typo or something on one of the graphics. One of the channel members usually lets me know if they find one. And then I'm like, oh, okay. So then I have to pull down the preview because I'll edit it. I'll pull it down. I'll put up the fixed copy if that happens. I think to date, since the channel members have been getting the day ahead, I think to date we've probably only had to do that maybe 2 or 3 times at the most. So it doesn't happen often, but sometimes something gets through. Normally I will catch most typos in the edit itself, because and I've kind of changed the way. And I don't know if you can tell when you're watching a video or not, but probably I think now for about 4 videos, instead of making the graphic in the edit, which I used to do, I would just basically type in the graphic, position it on the screen. I'm doing it fully on a background that I'm doing in Canva, and I'm bringing that over. So that way there, I've already done it, and I can double check it before I've even begun filming. And then if I do find one tiny thing in it while I'm doing it, I can quickly go back to Canva and just fix it. Like I think with this one here, there was one tiny error on there. I noticed there was a, I think after the return on equity, there was a double percentage point. So the double percentage. So I ended up just going back and removing one and then putting it back in. But anyway, yeah. So yeah, I guess in total, if we add it all up, one single video takes about little more than a full day of work to put that together. So keep in mind, I do 2 of those. Now the live streams. So this live stream here, the market closed, I don't have to do a lot. I will go through, I'll review things ahead of time, or if there's something that I particularly want to bring up, I'll certainly go through that during the day. Like today, I took a quick look to see if there was any market drivers I was unaware of, things like that. But for this week, because we got the news segment, I have to go through and do all of the news, and that's about half a day's worth of work. Just getting the news, pulling it together, and then probably another quarter day's work. Well, it depends. It really depends on what the topics are in the news. If I have to make a bunch of the new beaver graphics, so let me just pull up a beaver graphic for a second. So this is the first beaver graphic. So this here is attempt number 1 at my Mark Carney beaver. It's not great, but he's kind of got that bland face. It's really hard to make a Mark Carney beaver. Probably what I do want to do is I probably want to lighten that hair a little bit, get a little bit lighter gray, but Uh-oh, bell time. All right, guys. Sorry, I didn't. All right. Whoa, there we go. The market's closed. The market's closed. But yeah, so anyway, this here is my Mark Carney beaver. Until I get a better one, I'm not fully happy, but I'm happy enough to use it. But anyway, let's zip back to this studio. Anyway, yeah, that's a little bit about the behind the scenes. Now, after the scenes, guys, because all of these, what I've been doing, I've started doing this in March, is I've been seeing if I can find a short in each and every one of these live streams. So just something fun, something interesting that I can put up. So that, yeah, I've been doing that. And that takes, well, first of all, probably about 20 minutes to pull that together. I'll go through, edit it a little bit, do it all up in Final Cut Pro, and get it over. So all of that fun stuff. All right. Whew. Ian says, just got here. Hello, everyone. Hi, Ian. Good to see you. Bill says, I think most of BCE drop today is due to the dividend. Did that dividend drop today? That would, yeah, that would probably help explain part of it for sure. Let's see. Jordan says, doing very well today, enjoying the sun. Yeah, you gotta love the sun. All right, I'm gonna skip ahead of all of the no sound comments. AA says, strangely, it's a green day, and I am not sure why. Like I said, I mentioned earlier, and I don't know if you were here yet or not, AA. We got two main factors why the market's green. On the Canada side, there's a lot of excitement about Mark Carney. Trudeau's gone. People are feeling great about that. And where he's a finance guy, it makes investors feel a little bit better because he's going to be a little more aware of things that do impact the market. On the U.S. side, and also Canada side as well for this, the big meeting that happened with Ford and a few others with Lupnick, it went well. Ford likes it. It seems to have cooled down the temperature, at least for now. So right now, none of the tariffs have come off the table, but we're not at a point where it looks like it's going to go completely out of control at any second, and that's good. That the market's enjoying that on both sides of the border. Roku says, "Happy Sunday, Friday." Oh, sorry, happy sunny Friday. There we go. Looks like St. Patty's Day is sending us a pretty green day early. You gotta love it. You gotta love it. We got Mary in the house with a hello, and of course, guys, Mary's in charge of the like button, so you got to hit the like button. It helps the algorithm. You guys all know this. It helps the algorithm. So if you guys want to hit that like button, I'm gonna have some coffee. Why not? Oh, very good. Very good. That's fantastic. I apologize. I think I slurped a little there. Let's see. Guy says, or Guy, it's probably Guy. Let's see. Wow. Thanks for the info. Your work is much appreciated. Oh, yeah, absolutely. No problem. We got Rory. Rory's in the house. And then a few people. Just let me know about the bell. I always appreciate that. I always appreciate you guys letting me know if I get on a tangent, because you guys know I can go off on a tangent at any time, and sometimes it's hard to reel me back in. Let's see. Rory says TSX plus 350.17 on the day, enjoying it while it lasts. Yes. We all know there's a lot of pain ahead. That pain is not, it hasn't gone away. Nothing's really been fixed. Things have just been calmed down. And keep in mind, the whole idea of the tariffs and the issue on the economy, a lot of that is that right now what we're seeing so far is we're seeing the fear. People know that these tariffs are going to hurt the economy, but initially we're not going to see stuff. It takes a while for this to filter in. You have to look, if you look on the American side of the border, everybody and their dog, as in every importer and their dog, knew this was coming. And what do you think they were doing? Well, I'll tell you right now, their warehouses are stocked to the top, to the rafters. they've been buying like crazy from Canada, getting all of their supplies before the tariffs even came in. So right now, they're not hurting yet. They're not because, they have, they bought a lot of extra stuff. And even company like Walmart, I remember reading about Walmart. Walmart, they're smart. They've bought not just from Canada, but from any other countries, especially things like China as well, knowing all of the tariffs that were going to happen. They absolutely went crazy buying stuff, getting it all in before these tariffs hit. So for the most part, a lot of companies were very, very smart that way. Now they're going to run out of that inventory, and then the tariffs are going to start to impact. But that's why I'm saying it does take a little bit of time. And even companies in Canada who knew that we would be dropping tariffs. Well, a lot of them were also pre-buying, filling up their warehouses, getting ready for what was to come. If they haven't been doing that, so I'll give you a good example. So look at aluminum. So a lot of our aluminum can manufacturers, or a lot of our, let's take a beer company or something like that. Well, we have the aluminum, but we can't actually process it. So we have to send the aluminum to the States and then get them to make, for example, the cylinders that we make cans out of. They have to do that in the States for it and then for us and then send it back. So hopefully with some foresight, knowing that these were coming, especially, we knew we had almost a month knowing that we were going to get these extra aluminum tariffs. So hopefully they've got a whole bunch of them cylinders, like as much as they can hold already in stock. That would be the smart thing to do. Now, there will be companies that maybe they don't have the capacity, maybe they don't have the money to pre-buy a whole bunch of stuff. So there will certainly be people that fall through the cracks. But I think for the most part, both sides are pretty much ready for this. So all that you're seeing right now is fear, and all of the real pain is going to come a little bit later. Minus, of course, there are companies that have already begun laying people off. That's pain immediate. That's immediate pain. So that's the exception to the rule, because there are companies already starting to do that. All right. Bill says, Carney reminds me of Tim Conway. Only difference is I like Tim. Okay, fair enough. Fair enough. Let's see. Any idea why ATD stock is going down so badly? Business itself is not doing bad. Asset growth in the last 12 months is 22.58%. I'm wondering if I should get out while I am still green on that. Okay. Well, there's a few different things going on with Alimentation Couche-Tard. One, they're back in the running in their attempts to take over 7-Eleven. So yeah, that is back on the table. Things are kind of looking good. Like they have actually been in a situation where they have been saying, okay, we'll sell a few of these 7-Eleven stores to allow the takeover. So they're kind of looking forward to that. It could actually happen. If it does happen though, and this doesn't explain the down now, but if it does happen, they're going to be diluting their shares to be able to pay for it. And especially right now with the price as high as it is, and I know that they're in talks right now to sweeten the deal even more because they really, really want it. It's going to be good for them long term. But as a shareholder, yikes, if you're in the green now, I would absolutely consider. I mean, you have to make up your mind, but considering that there could be some share dilution coming up, and also considering right now, and this is kind of this thing, if you have a stock that you're not confident is going to do well through a recession and through all of the economic turmoil that's coming, and you're in the green, well, then you do have a decision. There's two things you can do. One, you can look at if they have sound fundamentals, but they're going to be impacted by tariffs, and you're like, okay, that's fine. I can just dollar cost average through whatever comes out my way. And usually if you have a long runway, this is the best way to go. just, say, okay, that's fine. Yeah. Okay. I know I know my stocks. I know my stocks are going to be going down. Maybe they go down 20%. That's fine. But I'm going to be buying at that, at that minus 20%. I'll be buying new stocks. So what you end up doing is you do end up lowering your adjusted cost base. So you end up, by dollar cost averaging through a recession, at the end of the recession, you're in profits faster than somebody who didn't dollar cost average, because you've lowered it down a little bit. And that's a good thing. That's a good thing. Now, the other scenario is some people will go, okay, I'm just going to start rebalancing into a more defensive strategy, because, that's fine. There are going to be companies that will do well through this recession. The deep dive I did today. So Pembina Pipelines, they're going to be one of those companies I think that'll do fine. The last deep dive before them, EXE, once again, another company that will do fine. Loblaws will do fine. I'll include the railroads, even though they will take a little bit of pain. They're going to go down, but they probably won't go even close to as far as other companies. So utilities will be fine. Basically, Dollarama will be fine. Any company that has an essential service that people are going to be using as we go through a recession, those will all be fine. So that's the second strategy. So the second strategy is you can move things over. Now, with that second strategy, once again, if you've got stuff right now and it's already in the red, personally, if the fundamentals are fine, I'm probably not moving those stocks at all. But if I have stocks that are in the green and I know they're going to take a hard hit, I could conceivably move them to a more defensive position. And here's the thing. Here's how I would handle it, though. Let's say, for example, I moved my Alimentation Couche, or let's go Brookfield Asset Management. If I moved my Brookfield Asset Management, let's say, because it's deep in the green, I went and completely sold out of it, moved it into something defensive. Well, once we get into that recession and we're nice and deep in it, and now I'm pretty confident that we're bottom adjacent at the very least. At that point, whatever defensive stock, which I'm probably now over diversified into, at that point, I could sell the Brookfield Asset Management position that I put into that stock and put that back into Brookfield Asset Management at a discount. So by going that way, when we do get back, on the other side of all of this, we're back in a bull market again. I will have more Brookfield Asset Management shares than I had going in, and overall, I'll be in a better position. So I'll have a little bit more assets across the board. So that's another way to do it. It's kind of like there's a whole bunch of different ways you can do it. Now, the absolute safest way is as long as you have, and basically the safest absolute safety is if you have good fundamental stocks and you do the dollar cost average. That is the safest way. I'm going to put that out there. So the second way, where you move it into a defensive stock and then buy back, that's not as safe. It's if you do it right, it's relatively safe, but it's not as safe as just doing a straight on dollar cost average as you move through that recession. There's nothing wrong with that as well. So there's going to be a whole bunch of different ways, and we're going to talk the recession itself, we're not going to probably see it until the end of the summer. So between then and now, oh boy, we're going to talk a lot about this, and we're going to look, and I'll probably do some videos on some strategies as well. So it's going to be fun. It will be fun. We'll all be fine. We'll all be fine. We'll do this together. We'll go through whatever they're going to throw at us together. Me and you, no problem. All right, Cowboy says, afternoon all, I see we have our second World Economic Forum puppet installed. Whoops. Rory says, I heard he won't call an election until October 25th. That would be interesting. But here's the thing, and this is kind of why I think everybody is speculating that he's going to call an election in the coming week. The biggest reason everybody feels this is that right now, they're surging in the polls. They're, by the time we get to the fall, chances are Polyev has polished up his message, and the newness of Carney will have worn off, and they may not do as well. So I don't know. If I were in their position, I would be calling it. I probably would have called it today, but maybe, well, since he got sworn in today, probably Monday. I know a few of you have been suggesting Monday, but yeah, Monday is probably a realistic time. We'll see. We'll see, Rory. We'll see. The thing is, Jagmeet and the NDP have already sort of signaled that they would be willing to support them further. So, he doesn't have to call, but I think the polls right now are what's going to, and depending on which polls you look at, I've seen some polls that actually have the Liberals ahead. I don't, I think those polls are probably not so accurate. As much as I know, a lot of you are not fans of the CBC, but they do have a poll tracker on the CBC that does an average across all of the major polls. So I tend to find that one to be a little bit better because it helps get rid of the biases out of the data, and that's always a good thing. And I think with that one right now, if we, according to the data, and I looked at it today because I need it for the Sunday show, if they held an election today, we would have a conservative minority. So that could be interesting. So now we have to see how this is all going to work out. Now, mind you, calling an election now, a lot can change in the polls between now and, let's say the end of April, early May, if we get an election. So this will be that pressure. So what has to happen? So let me paint a picture. If the Liberals want to stay in power, if they want to win the election, the gameplay, the path to doing that is that Carney has got to show, he's got to demonstrate that he can handle Trump 100%. So it's on him to do that. It's not on, it's not even on Polyev at this point. Polyev, now what he has to do is, if he wants to get back to majority scenario, is he has to change his message. He has to really Trump focus his message and show that he can handle Trump. That's what it's all about. Nobody is, this is not about the carbon tax. It's not about, it's really, all of the policies are absolutely irrelevant right now. Canadians are focused on Trump. They're focused on the tariffs, and if you want to win an election, you gotta be in the same boat. You gotta be in that boat protecting Canadians. Otherwise, otherwise, it doesn't matter what the polls say. Otherwise, you're going to be in trouble when it comes to those ballots getting cast. All right. Vic is in the house. Made it to a Friday stream. Absolutely. Good to see you, Vic. I did hit the like on the way in. Did you? Not too late. Go hit it. That's right. Vic has said it, guys. Hit the like button. Nice. Tim says, I finally went heavy on HHIS. Well, you're getting it at a pretty discounted price. So, yeah, I do still believe that there is a lot more room left in, in AI and with that bubble. I don't even want to call it a bubble, but I think there's still a lot of room left. So I think that's probably going to be a good move. But mind you, if we do go into a full-on recession, we'll probably see tech drop a little bit more. So there may be more opportunities to get it a little bit cheaper still, but we'll have to see how that looks. Roy says XEQT, looking to start one there. Yeah, I do like XEQT. So, and let's bring it up. Let's bring up the we'll bring up our charts here. XE. Well, that is XEQT. There we go. All right, so XEQT. They're having a pretty good day. They're having a nice day here. But I'm going to come back just to the 3-year on this. So I like this. So this here is the iShares All Equity, and what that means is, in a nutshell, XEQT, it invests in a whole bunch of different iShares ETFs, pulling them all together to give you a cross of the board exposure. So you get exposure on this one. You get exposure to the Canadian market, the American market, the European market, the Asian market, the Australian market, emerging markets. So this gives you a really good exposure across the board. And one that kind of diversification that a lot of times, a lot of people kind of miss is the geographic diversification. And when you think about what's happening in North America with these tariffs, right now, we're looking at a situation where the economies of North America could very well be impacted. Well, great. In this case here, yeah, that might make up about half of what's in this ETF, but the rest of the world might be able to help this one from slipping as much. But for the most part, if you take a look here, here is, you can kind of see this is the end of the last bear market, but this is how it has performed. Now, if we go further back, and I always say this, guys, when you're looking at a chart, always scale back, get a bigger picture. So you can see here, now this is on the 5-year. You can see we had a bull market here. There's that bear market. There's that last bear market. And then back here. So we're going to get another one of these. We are going to get. So this here gives us an idea. Yeah, okay, they will respond to the bear market. This is what they're going to do. So we know we're going to get that. Now, if your dollar cost average, like if this is where we go down, let's say we go into it right away. If you were to dollar cost average in here, that's really good, because it is going to rebound on the other side. You'll make your money back. But if we go further out, and you can see here's where they made it. This here, this is the pandemic. So that's that pandemic drop right there. So with the pandemic, I mean, technically this was the shortest recession in history. And I think they actually did. I think they kind of call it, I don't know if it's unofficial, but anyway, it was a little tiny recession, like a 1-month recession type thing. Then we went into a nice, really strong bull market, and then here's our bear market, and then back into a bull, and we're heading once again, of course, to a bear. It's going to happen. But yeah, this here I like, and this is XEQT. There's also there's VEQT, same idea. This here is the Vanguard version, and here let's go out to the 5-year on this one. This one's been around a little bit longer. Exact same picture. You're going to see this pretty much through all of them. And so you might say, oh, okay, well, if XEQT and VEQT are the same, well, which one should I choose? I love them both, but here's the thing. XEQT, they pay a quarterly dividend. And this one here, they do it once a year. So you only get a dividend once a year. So if you'd rather get a dividend every 3 months, XEQT is the way to go. There is also, I think there's also a ZEQT. So this here is the BMO version. And just to complete the picture, let's go to that 10-year. They came in a little bit late. So they kind of came in during right at the, not at the peak, but pretty much about a month into the bear market. And then, same general idea. Now this one here, they're also a quarterly dividend. So, you have different options, but I think an all equity is good. It's a good way to get that international exposure into your account. All right. And need to pull this back up. All right. Let's see. Tim says, Liberals and NDP don't care about Canada. Their only interest in calling an election is that the USA won't negotiate with an interim leader. They want to deal with whoever wins the election. Fair enough. Yeah, that's one of the nice things is that, and this is kind of, I guess, Doug Ford made the argument that he wanted that election so that way he could argue for Ontario, knowing that he would be there for the full term. That was one of the arguments. He said that he wanted an election early because he didn't have to. Like the Ontario the Ontario election did not have to be called until next year, but they did it early for that reason. So yeah, once we have a person who is going to be in place until the end of Trump's term, that will certainly, Trump will kind of know that that's the person that he's going to have to deal with all the way through. And that's also, I think, one of the other reasons why we need an election sooner than later. Let's see. AA says, totally agree with you. Now is their best chance. Carney hype is not going to last long. No. And the danger too is, it probably won't last through an entire election cycle unless he can actually start making Canadians sort of see that he is the best choice. And that means action, not words. We need to see action. Mario says, Harvest has 2 new ETFs coming out soon. The ticker symbol is HVOL and HVOI. All right, let's take a gander. Let's take a gander. I am curious because I have not yet looked at these. I'll just go to Google. Let's see, HARVEST, Harvest. I'll just type one in, and they should probably both share a page. HVOL. Let's take a gander here. All right, let's take a look. I'll see if it gives us anything here. We're over here. Let's see, HBIX. Oh, these are interesting. I have not heard of HBIX. Here we are. All right, let's take a look here. This is their press release. So, these are okay. Let's see here. Let's see what they got. Give me some information. Give me some info. There's not a lot of information here. All right, let's see here. Okay, so the first one is the Harvest Low Volatility Canadian Equity ETF. All right, and then that's the HVOL. And then the Harvest Low Volatility Canadian Equity Income ETF. Okay, so one's probably going to be a covered call version of the other. This is kind of interesting. This is going to be a defensive ETF right now. I can tell you right now, if you've got companies that have low volatility tend to be more on the defensive side. So this could be very interesting. This is your HVOL. All right. I don't know if you heard the cat. She's making sounds off on the side. But I have to, come on, guys. Give me the other one. Just a second. I'm just going to go back in fresh. See if I can get this. What is this HBIX? I do not know what HBIX is. Let's take a look together. All right. So let's see here. Oh, interesting. So HBIX is the Harvest Bitcoin Leader. Okay, well, the first one is the Harvest Bitcoin Enhanced, then the Harvest Bitcoin Leaders Enhanced Income. Interesting. So it might be that this one might have covered calls, and then this one might have covered calls and leverage. So HBIX and HBTE. So there's a couple more for you. If you like the crypto, those ones could be interesting. Neat. Thank you, Mario. Thank you for pointing us over to the Harvest. All right, let's jump back into the chat. Northern Gal says Carney needs a seat and prorogation ends last week of March. He won't wait until October. Prime Minister not allowed in the House of Commons. Think about that. Yeah, that's absolutely true. Now, there is one option. There is a by-election coming up in Nova Scotia. I believe it's going to be for the end of April. Now, I know they currently do have a candidate picked for that by-election, but if he was planning to go longer, there's no reason why he couldn't run in that by-election. That's typically what they would do, but I don't think that's going to happen. I actually think that by-election will probably get canceled if they call a general election. All right. Rory says, yay, got the update for GNU tax for capital gains reporting, version 1.85, if anyone is interested. Finally. Tim says, the NDP and BC said if they won, they would give everyone $1,000. Is that buying votes almost? Let's see. They won, didn't give anyone money, voted themselves a raise and a 4-month vacation, and are now trying to vote themselves emergency powers. Oh boy. Yeah, you can't if you make a promise, like if you promise everyone $1,000. And I honestly, Tim, I don't know if this is how the actual wording. I don't want to say true or not. I mean, I don't know the wording on this. I'm not familiar with this party, but if you promise to give everyone $1,000 and then you renege on that once you're elected, you're not going to get another term. Yeah. So I'll have to now. I kind of want to. I kind of want to look in. Jonathan, good to see you, Jonathan. Uh-oh, you should do a blooper reel for your 6K celebration. Maybe. Well, I actually I don't have a 6K one planned. I think our next one's going to be 7.5K. So, or sorry, yeah, 7.5. So 7,500 will be the next one, then 10,000. But yeah, every so often, and I haven't done it in a while. Every so often, I will throw a blooper onto the end of something. So I should see if I can find one over the next couple of ones, and maybe get a blooper on one of them just for you, Jonathan. Yeah, it's kind of fun. It's kind of interesting. Now with was it the 4K? Yeah, with the 4K celebration, you guys had me do a news parody. So I did a news parody program for that one. Nobody watched it. Well, maybe 200 people watched it or something like that. It was probably one of the least viewed videos on the channel. And I actually thought it was kind of fun to make, but yeah, nobody was interested in parody news, but hey, you guys had voted it. So I ended up doing it. Let's see. Rob says, I started a new position in ELF yesterday. Let's take a look at ELF. Let me pull up the thing. All right. ELF, ELF. Here we go. So I'm assuming that you're EL Financial Corporate Limited. I got here on the TSX, but you might actually be talking about ELF Beauty, and something tells me you're actually talking about ELF Beauty. But that other stock, I was like, oh, that's a big one. All right. So ELF Beauty, it's a U.S. stock. Yeah, I mean, look at this. They did really well in the first part of the bull market, but they're retreating. They're retreating again, and I can understand this. Let's go further back, and all right, in this case here, yeah, it looks like this is kind of a highlight. So yeah, there's always the possibility. A lot of times stocks will do stuff like this, and then they will go down, and they'll kind of do a similar thing again. I can see why you might be interested in doing that. Now, I'm going to quickly go into the key data here and take a look. Okay, well, this is good. They only have a 39% debt to equity. The return on equity is 14.24%. That's not too bad. I think there's a chance. That it could happen for you. No, that's not a bad move. Maybe not a bad move at all. Let's see. Rob says, I opened a new cash account and started 3 small positions in ELF and Self, and spec stock pick is FUBU. Interesting. Interesting. All right. Tim says, let's see. The more Carney speaks, the less chance he has, which is why he bans media from events unless they are media already subsidized by his government. But Kamala tried that and it didn't work. Okay. Well, we're going to see. Now, keep in mind, one of those things is that, there's going to be that argument put forth by the conservatives that he was advising a lot of the bonehead moves that were made, by Trudeau with some of the, but and once again, I'm of that opinion that he may have advised Trudeau, but did Trudeau actually take his advice? I would love to know that. That's what I really want to know. Right now, I don't. I honestly don't know if that happened or not. But that will certainly be, I think, a narrative coming out of the conservative camp, moving into an election for sure. Ferris is in the house with a hi. And Mary is saying, yes, the beauty product. Absolutely. All right. Ian says, are you still liking Timber Creek Financial? Is the dividend well covered? I do like Timber Creek Financial. Now they're a mortgage investment company, and yeah, I mean they've had a rough year. Well, let's take a look here. Um, Timber Creek Financial, pull them up. Although today they're up a full 1%. But as you can see, they were responding well to the rate cuts. But yeah, they have they've seen better days. They have. Now, if we pull out, I'm going to actually pull it to the 10-year. You can kind of see, they they're generally they're much higher than where they're at right now. So it's kind of one of these things where it's a company that I love, but I'll tell you, if they actually go below 6, oh, that love is gonna I don't know about that love at that point. So, um, I would say you're probably better off with a traditional REIT. So, something like RioCan. We'll go to RioCan here for a moment. And you can see with RioCan, let's pull out that year. You can see they've made a little bit of a rebound. They started to make a rebound. They're kind of, the turmoil pulled them down a bit, but I think they're going to be fine. So, yeah, Timber Creek Financial. I really need to do another deep dive on them. I really do. I know I did one quite a ways ago, but if we go to simply, we'll take a look here. I'm not going to go too deep. I don't want to use a credit on them at the moment. Timber Creek Financial. Right. TIMBER, Timber Creek Financial. Here we go. Yeah, they're actually looking here. Their earnings are forecast to continue to grow. I like that. And this here is, they do have some debt issues right now. So their dividend is not well covered by their free cash flow. That can be a problem. That can absolutely be a problem. But they have run into situations like that before. They have never cut that dividend as far as I know, at least as long as I've been following them. But you can only push things down so low, right? You can only push them down so low. Like right now, when you look at them, and let's get back here to. All right, let's get back one more. There we go. Timber Creek Financial. That dividend yield, it looks pretty big, but normally they're almost twice as big as what they are. So normally their yield is much lower. But yeah, that is kind of. And I'm going to go into their key data here for a moment and take a look. So right now, they got a 66% debt to equity. That's actually not bad for a company that, that does, in real estate, that's not considered that bad. The return on equity, I think that's a little low at 625. So yeah, it's going to be, I think I really need to pay a bit more attention to Timber Creek Financial. Yeah, they're one of my favorites, but favor will only get you so far. I need the fundamentals to stay strong. AA says, I am sitting with a bunch of cash and I was moving slow thinking market downturn just started, so I am still stuck with cash. Do you think I should have been more aggressive? No. I think you're going to have plenty of opportunity to buy stuff. Now, here's what I would say is if you're sitting with cash and you're like, well, it's not making me any money, you could look at something like this. This here's a cash ETF. So this is this one's called cash. It's about $50 a share now. This is its general movement. It moves through the month, but it maintains like $50. And it does pay out a dividend. Right now, it's sitting at 3.902%. There's other ones as well. PSA is another one. This is the Purpose High Interest Savings. Same general idea. We'll pull up the year, and you can sort of see they all look like this. Now, this one, their yield is at 3.999%. So, if you're making a 4% yield on cash while it's sitting there, it's not a bad way to go. It's not a bad way at all. What I will say, though, if you're a penny, if you're like a penny pincher like me, I will buy this on the ex-dividend day because then I will get it at really close to 50 cents, or sorry, 50 cents, sorry, $50. And that way there, if I use it later in the month, it's usually, it could be as high as, $50.20 per share. So you're making a tiny bit of profit there on that as well. So that's those are cash ETFs. And I do want to do another video on them sooner than later, actually. Let's see. Long story short, Green Day is not making me happy. That's fine. There are some people that are like, oh, it's a Green Day. Crap. There are people in that boat. Absolutely. There's nothing wrong with that. All right. Oh, let's get back to the big view for a moment. Good to move slow in DCA. Yeah. Yeah. That's the thing. Like, even when I think, like, once I maybe the market's 20% down, at that point I'll probably start DCAing in my out of some of my cash position. But I'm going to go nice and slow to start. And, especially if we're in a situation where we have a bear market that, let's say it goes a year, I don't want to spend it all right away, especially at that point. You don't know if the bottom is in. The bottom might still be ahead. So at that point, dollar cost average, I'll probably hit the bottom along the way. And, that's kind of how I would do it personally. Rob says, I sold my BTCY.B yesterday as I get my Bitcoin from MSTY. Yeah. All right. Fair enough. Yeah. I mean, MSTY, that's your strategy one. So formerly MicroStrategy. And they hold so much Bitcoin that they're like a Bitcoin ETF. They really are. Mario says, Carney better give checks out as well. Yeah. Unfortunately, yeah. Well, I mean, it depends. I mean, look at it this way. If you are funding, like if you're giving the checks, if you're giving checks to help Canadians out, and you're funding it by the tariffs, then that's not a bad thing, because at least then you're not printing money. I don't want to see them dipping into that money printer in USD. There we go. Tim says, BC NDP's own website from September 2024, David Eby to deliver $1,000 a year household relief starting immediately. It was in the form of a tax cut that they've now reneged on. Okay. All right. Fair enough. Fair enough. Like I said, I just don't know a lot about it. I haven't, I know a little bit more, I think, about Ontario just because, well, I live in Ontario. And probably a little bit more about Nova Scotia because I'm from Nova Scotia. But yeah, no, that's not good. That's not good. But it sounds like he wasn't going to give $1,000 checks. I think it sounds like he was just going to cut $1,000 in taxes, which, if you're promising a tax cut, you might as well give that tax cut. Bismarcky, I watched the news parody. I enjoyed it. Oh, okay. Yeah, there we go. Thank you. Thank you. You're one of the few. One of the few. Let's see here. Yeah. I agree. Let's see. All right. Carbon tax was Carney's brainchild. If you read his book, he talked very passionately about carbon tax and the environment. And there's the name of the book, Values Building a Better World for All. Yeah, no, he's very pro climate change. Absolutely. Yeah. And I think, and that's the whole thing. Like, he may be a pro carbon tax, but at the same time, and this is the thing, like, heck, I don't mind saving the environment. But we're in a situation where, it's save the environment at the cost of the people. And that's a tough, difficult situation to be in for sure. All right. Rob says, let's see. I heard Carney is already making a trip to France. His carbon footprint will be elevated, but you would think his first course of action would be to fly to Washington to meet Trump. Yeah, and they actually in his first speech, they asked him a bit about that. Like, are you going to go to the U.S. and see and meet Trump? And he's like, nope, not yet. But the reason, and he was asked about going his trip to France. He says that he's going there to try to open up more trade opportunities so that we can move more trade away from the States and more, more towards Europe. So, that's the reasoning behind that. So we'll have to see. I mean, I think I think, especially if he's going to hold an election sooner than later, I definitely think he needs to get down there, and I think he needs to get into Trump's face sooner than later. But, that's I guess that'll be his decision, and the polls will reward him for what he does. That's for sure. Ian says, pretty much drained my cash position yesterday, trying to lower my average price on some ETFs. Also, like the dividend rates right now on a lot of ETFs. Yeah, okay, fair enough. What are we gonna trade to Europe? Dirt? Probably energy. But the problem is we can't trade a lot of energy until we get a pipeline. If we could get that pipeline built, and here's the thing though, guys, even if everybody comes together and says, yeah, we'll do the pipeline, and Quebec says, okay, sure, you can run a pipeline across our land. It's not going to happen overnight. It's probably, by the time it's operational, Trump will probably already be out of office. So it takes a while. It takes a while for sure. But there's probably a lot of products that we can certainly, Canadian steel, Canadian aluminum, for example, uranium. Right now, we're one of the big three providers of uranium in the world. I think it's us, Australia, and Kazakhstan. So there are things that you could trade, and we do need to broaden our trading base, because the fact that so much of our trading base can be crippled, like the fact that our entire country can be crippled by one other country, shows how much how undiversified our trading base is, for sure. Nigel says refugees. Yeah. Well, I think most of the refugees, if anything, are running from the States at this point. And AA says, Quebec said, no, there won't be any pipeline to the east. And yeah, Quebec has been the stumbling block. So, because you have to have the Quebec government as well as the native folk as well agreeing. So that's, if they say no, they say no, unfortunately. But here's that thing. If you want to export oil to Europe, you only have to get it to the Great Lakes, because, you can go out through the St. Lawrence Seaway that way, ships and things like that. So technically, as long as you got pipes that get you to Kingston, let's say, you could probably set up a port to export oil coming out of Kingston, going out through the St. Lawrence. Rory says, Quebec will take no common sense advice from the Conservatives. Then Alberta must stop transfer payments. Yeah, it's, you have to sort of, that's the thing. You have to kind of, the provinces do have a lot of power, and, but that's the whole thing. And this is what, it actually, I mean, honestly, if you think about it economically, right? If you got the oil all the way to Nova Scotia, well, you're still going to have to put it on a boat. So it actually is more economical to ship out from like Kingston through the St. Lawrence. That's fine. I think that's perfectly fine. It'll make the St. Lawrence a lot busier, of course. Let's see. AA says, I am from Quebec and I agree with you. All right, there we go. Let's see. Current pipelines for energy to Ontario go from Alberta through the US and up into Ontario. Yeah, we see this is where we would not go through the US. We would just go straight across. And that's kind of the whole idea. So you could go through Alberta, through the US to the Atlantic provinces, maybe also and bypass Quebec. Yeah, you could do that. But with the tariffs, that becomes a little bit more of an issue. So, like I said, you only have to get. I mean, you could even, as long as you got to like Lake Superior, you could still ship it out from there if you really wanted to. But I'm thinking, get it to Kingston. Kingston would be a good location. Create a lot of jobs in Kingston. Let's see, Hudson Bay and the Northwest Passage, no cash for Quebec. Yeah, there's another option as well. But the only problem I would say with that, Cowboy, is that you do risk, I don't know if I want to send a lot of oil tankers through a part of the ocean where there's a better chance of maybe running into an iceberg and having an oil spill. That would be one thing I would say about that. But especially with climate change, I guess it is opening it up more for sure. Rory says, or just use CN or CPKC and ship it all by rail. Well, it's another option as well. So there's that too. But I mean, here's the thing though. If you ship it by rail, you still have to load it into boats. You still have to sail it across the ocean. So you really only have to get it to water. And that's why I was thinking, that's why I think Kingston. That's where I'm kind of leaning towards Kingston. Maybe Kingston is like, hell no, we don't want that. I can't see why they would say that, but you never know. Let's see here. Tim says Japan and Asia also want Canadian natural gas, but pipelines through BC are facing massive delays. Yeah. I mean, one of the things, I was just trying to think, like with the trans pipeline through BC. I was trying to think if you could actually twin that, but I know parts of it are underground, so that could be difficult to do. But I know right now it is not at capacity, so they can move more gas through it than what is going. But yeah, no, I mean, the more we can open up, the more we can get our processing. And the other big thing, and I know the Conservatives have talked a lot about this, is getting our own processing so we can actually process our own oil. That's going to be big. But keep in mind, all of this is going to take time. You can't just sort of say, okay, yeah, we're going to start processing our own oil as of tomorrow. No, it's probably going to take years to get that. But it is something I think we need, in a direction that we need to move into. All right, Northern Gal says, unfortunately, we don't write a check to Quebec. Need federal government to change the agreement. Let's see. They have a Portuguese of Oshawa here in Ontario. Yeah, you could use that as well. That's the whole thing. As long as you get it to the Great Lakes, you can, now mind you, if you go further, the deeper in, you have a few locks you have to get through, but, it's still doable. Mario says, Carney just scrapped the carbon tax. Good. Good. He did promise to do that on day one, so I'm glad to hear that he has actually done it. Let's actually, give me 1 second here. Let me bring up, let's take a quick gander over at the Globe and Mail here. And there we go. Carney sworn in. They haven't reported on it yet. Oh, well. Yeah. Let's see. Promises updates on carbon pricing. All right. Well, let's hope that he has done that. Mario says that he has, so I imagine he probably has. All right. The United States of fascism. It sure feels that way, doesn't it? It's like, yeah, it's one of these situations where hopefully in 2 years, if you can get a house controlled by the Democrats, they'll be able to put up a bit more of a fight against some of the stuff. But I think that's why Trump is moving so fast, get all these changes in while the Republicans still have control of the House. Let's see. Cowboy says more derailments than pipeline breaks. Yes, absolutely. That is always an issue. That is absolutely always an issue. Rory says, doesn't Alaska pay dividends to all state residents? Honestly, I don't know. Rory. Let's see. I know all about derailments, had a few as an employee. Yeah. I mean, yeah, depending on what they're carrying, it's never a good, derailments are never good. BC has its own carbon tax, likely won't get scrapped. That's probably true. I know there's a couple of provinces, I think, that have their own version. Tom is in the house. Let's see. Given the economic environment, which ETF with a return of around 5% would you suggest holding in your non-registered account? Ooh. That's a key. So you're looking at a return of around 5%. You know what? I don't know off the top of my head, Tom, but I do want to actually do a video on ETFs, basically that are suitable to the economic environment for sure. Now, one ETF though. Now this here is going to be more than 5%. Let me pull this up here. Actually, it's an Evolve ETF that I've been meaning to take a look at. I haven't actually looked, so I don't even know what I'm heading into right now. We're going to take a look though. Whoops, let's click here. I'm actually talking about UTES. So UTES, here we go. So this here is the Canadian Utilities, and I'm big on utilities right now. So I'm going to pull this up. Let's take a look at the last year. Oh, yeah, this hasn't been moving in the right direction. Now, yeah, it might be the size of their yield. No, actually, it's not that big. It's only 5.854%. But this here is utility should be a safe play going into a recession, going into some economic downturns. This is new though, and this is kind of one of these things. I will mention that a lot of times with these new ETFs, when they come out, you almost always see drops right away. It's kind of like the same effect that you'll get with IPOs. It's one of the reasons, like I will almost never invest in an IPO. I will wait until it's had its fall, and then we'll take a look at what's happening. So pretty much for this one here, I will look at since about probably December of this year. But I think utilities is going to be a strong bet. Now, I wonder here. Oh, you know what? XUT. This is the iShares. Let me pull this one up. And this is one here where, now they're not using covered calls on this one. This is just a straight up. But you can see that it's been doing kind of what I've been expecting with utility ETF. This one does have a dividend. Now, it's about 4%. So 3.987%. So it's a little bit lower than what you're looking for. But I think it's going to be strong. I have actually just added, and you guys will see this in the next 0 to 100K challenge. I have added XUT to that challenge because for me, it's a really good defensive ETF. But I do want to go through, find a few more, and get a video together really, really soon on that. So this might be an option for you, Tom. It's not quite as much as you want, but I think they're gonna do fine through whatever happens. All right, Rory says Carney didn't scrap it. He's adding it to the industrial. Yeah, I know he's reworking it a bit, and I haven't seen all of the documentation on how that's going to look. So I'll be very interested to see that. Northern Gal, Carney is only stopping the consumer tax, wants to increase industrial, plus impose a carbon tariff on other nations. He's not taking the tax away. No, he's trying to. I mean, he's shifting it. Now you have to be careful too. I mean, if you take a front-facing tax but throw it on the back end, usually that still ends up filtering down and getting the person on the front end. Now, what's dangerous, I guess, with that is guys, I don't know. I have to see the documentation. I have to see exactly how this is going to work. But if you do that and then all of a sudden people, especially on the lower income, the ones who are relying on the carbon tax credit, they'll no longer have that, or the rebate, the carbon rebate. So it could make it a little bit more difficult, but I do have to see how this is all going to work. Like, this is all brand new. So let's see how exactly it's going to work before I jump on it one way or the other. But right now, I don't know how it's going to look. Let's see. Cowboy says, what is it being called now? Let's see. It's on BNN about Carney. Okay. Very cool. All right, WCP merger. Will the stock recover? So yeah, WCP, they're merging with Viren. Now, Viren used to be Crescent Point Energy, so they're pretty cool. So yeah, they're merging. Um, I think it's going to make them a bigger, more well-rounded company, and I think it's going to make it because I actually I dug a little bit into this because Ian asked me the other day about it. I think I think it's going to make them a better, well-rounded company in the end. So yeah, I think WCP is maybe at a good, not a bad place right now. I think that they'll be more resilient with the tariffs and with everything that is trying to happen. So I think WCP is going to be fine. So I'm not telling you to go buy it, but I'm saying if you've been considering it, I think it may not be a bad move. I think it may not be a bad move. Rory says it looks like they're trying to recover. Yeah, I'll pull them up. Now, keep in mind, there are still regulatory bodies that have to get through. So if this goes through completely, the merger, I think by the end of May, should already be done. So here is that drop, but yeah, they are starting to recover. So I kind of like now that I had a chance to sort of take a look at what's been happening. I kind of like it. Like, actually, the interesting thing, people who are holding Viren stock, they're basically trading their stock into into WCP. So for one share, for every share, you're getting $1.05 worth of WCP. So it's not bad. It's not a bad thing at all. Let's see. Michael says PED had no debt with new oil wells and partnerships with another upgrade to $1.50, which rumors getting bought at close to 73 and in after hours at 76, which could hit 150 or higher Monday. Interesting. And Tom says UTES is my second largest holding. There we go. Yeah, I imagine with my partnership with Evolve, they'll eventually have me doing UTES. But so far, I think next is Bank, and I'm probably going to be filming that this coming week. So Bank will be coming out before the end of this month. Tim says Canada and Europe import oil that is drilled in Russia, while also putting sanctions on Russia and funding a war against Russia, but refuse to build new refineries or use Canadian oil in them. Yeah, right now, like we need to build our own refineries. That I think is very, very clear, and I think all parties are kind of getting. Before it was just the Conservatives that were thinking, yeah, we need to. Although, interestingly enough, the Conservatives have been saying that we need to for a long time, but every time they get in power, they still don't do it. We need to have it happen. We definitely need to have it happen. And Mario says, my Utilities by Harvest is doing not too bad. Yeah, I like HUTL. Let's actually pull them up. Let's pull up HUTL. There we go. And this is your equal weight. And here we go. 8%. 8%. That's not too shabby. But yeah, this is one I do like. And yeah, you can see they've got some good movement on them as well. So Huddle, and there's also one that has leverage as well. So I think it's was it HUTLE, I think, or something to that effect. All right. Cowboy, how can the tax be dropped without a vote? The HOC is closed for business. Whoops, I was jumping ahead to Paul because he was asking a question about UTES, and I was like, yeah, that's right. Anyway, let's see. How can the tax be dropped without a vote? The House of Commons is closed for business. That's a good question. That is a good question. I'd have to look into that. Like, I don't know if they need a vote to do that. Well, I don't think they'll have any problems getting, if they need to vote, then maybe nobody will mind so much. But, yeah, I don't know the exact answer to that. I have ideas in my head, but I'd like to confirm that before I say them. And yeah, Paul was saying, let's go back here. Why the heck was it showing me something crazy? I thought it was higher. I was thinking, what's going on here? All right, let's take a look here. Yeah, look at this. It's showing a 5.854. Why the hell is it showing that it's so low? I was thinking it was much higher than that too. I was like a little confused. Why are they doing? All right, you know what? Let's head over to Yahoo Finance. All right. All right. There we go. All right. We'll go to Yahoo Finance and let them clear it up. Somebody must have typed something in wrong somewhere. Hello, Yahoo. Yahoo. All right, I'll try refreshing it. There we go. All right, let's come down here. No, okay. Now, of course, it's an ETF, so I don't have a statistics page. All right, let's see here. Year to date, that's fine. I don't want to see that. I want to see, seriously, guys, you're not giving me a yield in here. Okay. You know what? Let's let's actually go to Evolve ETFs. It's like why not? We'll go right to the head of the snake here. All right. Let's go to products. All right, UTE. Let's see here. Where are you at? UTES. Oh, there you are. Darn it. That's fine. Actually, we'll go to the page back here. There we are. All right, UTES. All right, let's take a look here. Ticker. All right, guys, where is your yield at? All right. All right, we'll go over to distributions. Guys, where are we at here? Where are your distributions at? Holy, all right, down here. All right, distributions. All right, so yeah, they're paying 13.8 cents. So that's, yeah, that is definitely distribution monthly. Yeah, so that's definitely higher. I think it's a lot higher to 17%. I don't know why it's not listing it in here. Maybe it's just maybe it's there and I'm like totally just zoning right over it. But yeah, here's your management fee, 0.60. Dear banana bread. That is interesting. Let's go to, I don't want to go to documents, performance, portfolio. Yeah. But yeah, I would say, yeah, you're about right. I say you're right. It's probably closer to 17%. So yeah, that was kind of weird. I was, like I said, I was expecting it to be much higher, but 17% does explain why we're not getting that same movement that we're seeing with HUTL. So not too shabby, not too shabby. All right. Let's see. Carney is just trying to fool Canadians on carbon tax. Yeah, and Tom was saying the same thing. So yeah, I was like, All right. Northern Gal says, looking forward to bank, wondering about buying them instead of some of the individual stocks I already hold. Yeah, bank. I'm looking forward. I'm looking forward to doing bank. I can't wait. And see, bank is my second largest holding now after I sold BNS and bought bank yesterday. Nice. Mario says, I have call from Evolve. Yeah. Yeah, I don't know what the third one is. There's a third one that's on tap after bank. I don't know. I can't remember what it is, but they'll probably get me to do it eventually. Northern Gal says, let's see, they set the rate to 0, but I can't repeal the act. But they can't repeal the act. There we go. So setting the rate to 0. I was thinking that there's changes that they could make. But yeah, that makes a lot of sense. And yeah, 16% yield on bank. Ian says, dividend yields don't always show up correct if the ETF is less than a year old. That makes sense. That absolutely does make sense. And sometimes, yeah, sometimes I'll get wonky. I'll get a wonky yield on TMX, and I have to go check it out. I'll usually check it from multiple sources for sure. Cowboy says, let's see. Then it's gone. It's paused until a more convenient time. Yeah, so technically it's not gone. We got a we have a carbon tax. It's just zero at the moment. Let's see. Jersky says, hello. I've been picking up some HYLD, HTAE, and I got some HHIS. Nice. Nice. Now, and I mentioned this before. I'm going to mention this again. Let's actually head over here. So with HYLD, now I absolutely love the Hamilton. This is the enhanced US covered call, but you can't tell from looking at that they use leverage, but they do. This is uses about 25% leverage, and I'm going to come back to 5 years. And the reason I'm coming back to 5 years is this is when they began, and then we went into a bear market with leverage. That's why they dropped so much. So you'll see this is a massive, massive drop. So going into a bear market, this is one of these ETFs. As much as I love the ETF, I'm a little bit leery, right? Because I don't want to be on it. I don't want to, I don't want to have a big drop because you're going to drop 25% harder. And then when you recover and you go into a bull market, you're also going to lose that potential. So you are going to lose some of your upside potential. So you'll notice this has never gotten back to where it started. And that's because, you were hitting strike prices in the bull market, and that's fine. Because, when you buy, when you get into an ETF like this, 13.63% dividend yield, you're there for that yield. You're not there for the value, but a value like this, I don't like to see it. Now, here's the thing. If you are 100% an income investor, so you've got this in your TFSA and this is just generating income for you, well, then you probably don't care that this has happened. And quite honestly, if it was up here, you had and then it went all the way down here, yeah, you're getting it much cheaper and you're getting more money a little bit faster. So you're actually making more money because the new stuff you're buying, it's pulling your average down. You're averaging down. That's fine. So coming up here, if you are concerned about the share price, it is going to drop as we go into the market. Now, mind you, when it does start to recover, you are getting, you're not getting back up here, but you are getting a lot of dividends in here too. And if you were to add and factor all of those in, you're probably closer to about here. You're probably not all the way back, but you're really darn close. And I've done this with a whole bunch of different stocks just to sort of demonstrate in a few videos, but that's kind of where you're at. But keep in mind, as we head into a bear market, you are probably going to, it is going to go down quite a ways. If we go into a pretty good bear market recession, I could see this even making it down to like, it could make it down to, it might even break below 10, just to keep that in mind. So that's just something to keep in mind. Now, if you are, like I said, if you've got it entirely for income and you're like, I don't mind. The good news is they'll cut their dividend, but they won't cut it a lot. And then it will recover that dividend as well. So just something to keep in mind so that you don't get freaked out. Because sometimes if you don't realize what is going to happen, and it happens, you don't want to be that person who panic sells and creates a whole bunch of loss on your books. So just something to keep in mind. All right. So yeah, Jersky. Okay, your average is 12.64. Oh, that's not too bad. Not too bad. Ian says, let's see, my dad was texting me yesterday, all worried about a 10% drop from his peak, had to talk him down from selling. He sold near the bottom in 2020 and missed on the recovery. Yeah, that's why I always sort of say, like right now, we know we got a recession coming. So make your plans now. If you're going to do some selling to to sort of shore up your defensive strategy, or if you're just going to take the first option and dollar cost average into the things that are good. The big one thing I will say with that first strategy is if you've got like low cap stocks and they don't have super great fundamentals, those are ones you might want to consider maybe moving out of them, just to move into more defensive in that case. But for the most part, if you have good fundamentals, you're going to be fine. You're going to be fine for sure. All right. All right. Tim says, breaking. Carney has signed an order to get rid of consumer carbon tax, but is still promising to send rebates checks in April, which will likely be delivered through the middle of an election campaign. Well, yeah. You don't want to cut those checks in April if there's an election campaign. That would be that would cost you votes. Northern Gal says, Candace, I am that income investor and more worried about the yield now rather than the growth. Some of the ETFs such as this are drip, so it will be okay in a bear market. Okay, fair enough, fair enough. And I mean, with HYLD, let's take a look. We got all the evidence we need here. Let's go over to our key data, and I'm going to go right back to, all right, so here they are. So it started at 13.8 cents a share, and it was already in the bear market, but they did raise up to 14 cents. Now, of course, the market was tough, and they did that big dividend cut. They went from 14 to 12. Then from there, the 12 went back up to 13, back up to 13.8. Now past the 14, 14.5. So the good news is you might get a cut, but you won't get a big cut. It'll still be a really good income performer for you, even in a recession, unless this turns into something that were unexpected. But if it follows the trends of the past trends, you're probably going to look at a small cut along the way. All right. Rory is still going to vote for Pierre. There we go. Tim says, in BC, I get a whopping $34 every 3 months for a climate action rebate thingy. Fun. That's not a lot. Let's see. Ian says, probably the only smaller cap or riskier assets I own are WCP and TF. Don't know if they would be considered risky or not. I think they're both. Like, I think WCP is going to be absolutely fine now that I've had a chance to dig into them. I need to dig more into Timber Creek Financial right now. I still like them, but I'm putting them, I'm going to call it orange. I'm going to call it an orange alert on the Timber Creek Financial until I can get some more data. AmVas is back. We missed you. Haven't seen you in a while. And you missed us all too. On vacation, grateful catch you. Appreciate all your YouTube videos for 1K income. Would you rebalance during these times? With an income, so once again, with an income portfolio, it would really depend on like what you're holding. So for example, things like HYLD, I'm okay with. Something like UTES, that we were looking at as well, I'm okay with that one as well. So it really boils down to, I think the one that I might be a little, there really isn't any that I'd be leery of. I mean, you'd have to be prepared that some may, they may lose a little bit of value for sure. That's going to be normal. And that, how many are going to cut their dividends? How much are they going to cut their dividends by? So I would be looking at that. I would take a look with any, especially if you have older ones, like with HYLD, we can go back and look what happened in the last bear market. Now, here's what I would worry about is I'd be highly cautious with some split cores, because some split cores have been known to cut their dividends, during some of the bad times. So I would be a little more leery, depending on which ones. Like there's a couple of split cores that I think are really good. Like ENS. ENS is not bad. I think they in the last bull market, I think they missed one dividend. That was about it. So that is something to keep in mind. $34 buys a lotto ticket. Let's see. Jersey says, I wanted to buy mostly VFV this year, but it hasn't dropped enough yet. Fair enough. And VFV, I think, is a pretty solid performer. They're going to be fine as well. Like, even if it goes down, they will be fine. Is Bank a better buy than BK? So BK, that one there, well, that one's a split core. So yeah, I personally, I do like both of them. I do like BK. Not going to lie about that. But Well, here, I'll show you guys BK. Let's go to BK here for a moment. So here it is, Canadian Bank Core. So it is a split core, but it's got a nice looking 16.593% dividend. It's a monthly payer. And let's go to the 1 year. And you can see it's been kind of moving similar to what the banks have been doing. I mean, it's been following the normal thing. Now they are a monthly payer. I don't know if they like this is another one of the ones that split cores that I like. I also like ENS, as I mentioned. That's the one that they basically only invest in Enbridge. This is not a bad one. Now, there is, and I can't remember the ticker right now, but I know there is a new covered call one that just invests in a whole bunch of different split core stocks, and that might be a better option as well. But I think they're both fine. The one thing with bank is I think as they're falling, bank is probably, I would give the edge to bank as we fall, but coming out, BK could be fine. And there's nothing to say you can't sort of, go with both, just split, your bank money in half. That would be an interesting, thing. I kind of wish I still did battles. If battles perform better on the channel, this would be a classic bank versus BK. Oh, I kind of want to do that. Ian says, let's see, was building my position in TF and my TFSA with other dividends. I might pause for a few weeks. Yeah, there's nothing wrong with that. Let's see, Burger King. You gotta love Burger King. Tim says, I'm depressed. PDIV dropped Starbucks from their ETF. It felt luxurious getting that sweet foam and sprinkle money. Oh, yes, absolutely. All right, guys, we're almost getting there. So if you got any last minute questions, get them in. In fact, this is actually a really long for a market close. Normally our market closes are about an hour, but you guys brought the game. So it's not too shabby, at all. I'm liking it. All right, I'm just gonna come back up a full screen while we push along. Ian says EXE was an incredible buy 2 years ago. Don't know where I heard about them. Might have been here. Got some at under $6. Should have bought more. Yeah, I think I did cover EXE on a list video back in the day. And that's one of those ones where I was looking at it and I'm like, dear gosh, I wish I had gotten in. But here's the beautiful thing with a company like EXE. I mean, their fundamentals are solid, and there's a lot going for them going into this. Not even just going into a recession. The fact that so many Canadians are really, really old now. The baby boomers, they're moving into that point where they might need that extra help. And EXE is going to have no shortage of customers. So I think that bodes well for them for the next, I would even say, I'll go as far as saying they're probably going to be looking good for the next decade. So, if you think, oh, I missed the boat at $6, they're now at like 13. There's going to be people who are going to be saying a few years from now, maybe, I don't know if a few, maybe 2, 3, maybe 4, who knows? But there's going to be people when it's at $26 saying, oh, I wish I had bought in at 13. So I think they have a bright future in front of them. So, in fact, I also added them to the challenge as well as one of my defensive buys. So what can I say? And Paul is saying, as an income investor, I prefer bank over BK. Yeah. Understandable. Like, I do like bank a lot. But BK is one of the split cores that I like, but I do like bank a lot. So I you know what? I trust Paul. Let's go with what Paul has said here. So QQQY is another good one from Evolve. Yeah. So QQQY, that's their technology one. Interestingly enough, I recently did a deep dive on QQQY, and that's how I got a partnership with Evolve. They were looking at, I don't know, they probably were searching on YouTube their own ETFs and found that one. But that's the one they found that video and they're like, oh, this Candace should be making some videos for us. So, that's how that came about. Mario says, I sold 2% of my pizza. I'm now back down to 5% portfolio. I broke even. Nice. Let's see, Severia Corp and EXE. There we go. Severia Corp. There's a lot of good ones out there. And Mario says, I own QQQY. Awesome. Gotta love that. I'm almost out of coffee, guys. Oh, so good. So very good. All right, guys. So this weekend we have this week, of course, on Sunday as usual. And I don't yet know what the next video is going to be, but it might. Oh gosh, it might be defensive ETFs. That could be one. I haven't decided yet, but I think maybe. So, and today, guys, Pamina Pipelines, I dropped that deep dive today, so be sure to catch that one. That would absolutely be awesome. Ooh, this is a good one right here. I'll get right back to you in a second, Amvas. Rory says, why does YouTube keep unsubbing me? YouTube will do that, guys. Sometimes you may be subbed, and I've never had it happen to me with myself, but sometimes YouTube does that, and I don't know why. I've heard a lot of content creators check over it. So guys, let's just do it right now. Let's do a sub check. Check the sub, make sure that you are still subscribed, because you may think you're subscribed, but maybe YouTube has unsubbed you again, like they did to poor old Rory. So yeah, it never hurts to check that every so often. And sometimes it's funny. I've seen times where out of the blue, I might drop like 5-6 subs, just bang, just gone. It's like, what the heck? It's like I didn't even have any content out, but it's usually the YouTube going through and cleaning out, because sometimes they'll clean out like bots and things like that, because sometimes a bot will come along and sub to you, and that they're always cleaning that stuff out. It's actually funny. I'm going to pull up a piece of data here for you guys. This is actually really kind of cool. All right, let me see here. Now I have to remember where to find it, but there we go. I think it's here. All right, I need to go to all time. Give me a second here. All right, I need to go to lifetime, and I need to add some data here as well, but I need to add some categories. So let me take a look here. All right, give me a moment. I'm going to get this. I'll pull this over so you guys can see once I got it. Once I got it up. Yes, there we go. I need to pull up 2 pieces of data. All right, and then we'll take a look. And this will be kind of funny. This is actually going to be kind of funny. All right, here we go. All right, here we go. I'm going to pull this over. All right, give me a second. Come on. All right, here we go. I have done it now. Oh, I need to share my screen. Here we go. All right, so we're inside of my analytics. I don't know if you guys can see this or not, but so I have in total 7,056 subs have happened to my channel, but I have lost 1,423 subs. So that leaves me with a total of 5,633. So it's funny though. Yeah, you end up getting, like, I've seen some really big YouTubers who were revealing this, and you look and it's like a crazy amount of subs that are gone and come. And it's a normal thing. Like, it happens. It absolutely happens. And YouTube will go through and they will clean out some of the subs. So that's just an absolute normal thing. So yeah, this is kind of the back end of, and you can sort of see right here. Right now, the the Understanding OAS. That has been the most successful. That's brought in 315 subs. So gotta love it. Gotta love it. Anyway, let's go. We'll go back to this. We'll go back to that. That's probably boring anyway. I get excited because it's data. Cowboy says, how often does bank pay? Monthly or quarterly? That's a good question. That's a good question. Let's go back to there we go. No, this is Utes. We need to go to bank. Let's go over here to bank. All right, here we go. I thought it was a monthly. I thought it was a monthly, but I could be wrong. I could be wrong here. Let's see here. Distributions. Yeah, it's monthly. So here we go. Monthly, and they're paying out 11 cents per share. So yeah. So bank is monthly, but we'll get like I said, we're going to get a video together on that. Quite literally. Well, mind you, I'm going to script it over the weekend. I will film it Monday. Probably I'll have it done by Tuesday. And then I play the game where they'll look and they'll say, oh, well, can you change this one little thing? And I'll be like, okay. So I imagine it'll be out before the end of the month. But now that I kind of have a feel for what it is they're looking for, I can avoid a lot of the back and forth that I had with the first one. So what can I say? Ian says, I'm subbed. Bell is on. Awesome. Awesome. And Paul is confirming the monthly. There we go. All right, guys. This has been another fantastic stream. We've gone almost 2 hours, so not too shabby. Like I said, I'll be back here on Sunday. I can't wait. We're going to have a fantastic show, and it should be a lot of fun. So until then, enjoy your weekend. Hopefully you got double digits where you are over the weekend. I'll see you guys on Sunday. Take care, everybody. Bye-bye.